There may be some irony here that with Narendra Modi in Berlin and Berlin talking about potentially ending purchases of Russian oil, that India may end up picking up those cargoes. How do you think it's going to work? If Europe was able to ban Russian crude, where do you think that crude would ultimately end up?
Well, we're already seeing, Guy, that it's heading towards India. And so, as soon as there was the invasion of Ukraine, we saw India picking up some barrels. So we saw a couple of million going in March. We saw 7.5 million barrels going in April. Now we've got 23 million barrels looking to discharge in May here. So it's clear that India is picking up these deeply discounted barrels. Now, going forward, there's the talk of this deal being done where they could pick up around 500,000 barrels a day over the next 6 months, starting in June. So they're going to be one of the leading beneficiaries, recipients of any type of ban going on. And you're already seeing certain European countries pivoting away from Russian crude. And as that happens, you're seeing others finding opportunity there. So India is at the forefront of that. We've also seen a bit of a pickup going into Turkey as well. The one omission that we have seen is that we're not seeing a real strong pickup into China yet, but that may be more related to the demand side issues that they're facing in terms of lockdowns. They may also be waiting for a bigger discount for those euros before they start picking them up. Either way, India, China look like the biggest beneficiaries going forward here.
Matt, how does this ultimately all balance out in price, where you've got all these, moving parts, India maybe buying more Russian oil, but Europe considering an outright ban on oil? Obviously, U.S. producers a little bit reticent to ramp up the oil production machine. Where do you see price headed over the next 12 months?
Well, sure. The big concern for prices going forward is just a potential recessionary environment as we move into next year, just because of inflationary concerns, etc. But in terms of demand and supply, aside from the issues we've had with China on the demand side with the lockdowns there, elsewhere the market has been fairly well supported, right? The one thing we do have coming through in the next few months is from the US side of things. Even if we don't see a real rapid pickup in production, we are seeing that kind of ticking higher, but there is that double whammy there coming through from that SPR release, 180 million barrels potentially hitting the market over the next 6 months. So that's looking to backfill the potential loss of Russian production, which is surely going to happen should we see some type of embargo, because India and China are unlikely to be able to pick up all of the loss of that crude that would otherwise be going into Europe. So all that said, prices look to be around this kind of $100 mark, potentially higher here, depending on the supply losses going forward.
Matt, let me just ask you a hypothetical question, but I think it's relevant here. If an Indian refinery bought some Russian crude at a discount, refined that crude into diesel and sold that diesel to Europe, would that diesel be Indian crude or Russian crude?
That would be considered. There's just no way for it to be able to be declared as Russian crude being turned into Russian diesel. And so it's essentially not an issue because, India's bringing in about 5 million barrels a day. So the amount of Russian crude that it's bringing in is fairly small. It relies on the Middle East for sort of 2/3 of its crude imports. And so you've got all these different types of crude from West Africa, from Latin America, from Canada and the US going into Indian refineries, being blended, being refined, and then exported out. And so there's just no way to follow it along the supply chain to be able to say, oh, look, this isn't, Indian produced diesel or that. It's actually Russian. There's just no way to track that, unfortunately.
How do you see the Saudis reacting to all this movement and deal making in the oil landscape?
Being as they are, being very quiet. OPEC Plus as a group is very apolitical. They've kept quiet in terms of any type of commentary on this, and that should be the view we should expect going forward here. OPEC Plus is looking to continue to put more production back onto the market as demand rebounds. They're not likely to be. They're in this relationship with Russia, and so they're unlikely to go against them. So we should expect to hear not only Saudi but the other core members of OPEC being pretty silent on this matter, just staying on the sidelines.
Matt, does Russian crude continue to trade at a discount, or as we start figuring out ways that it can be sold to India or China or whoever ultimately it ends up being sold to, that discount disappears?
We still see that Urals discount at about $31. So it's been kind of in that region since the invasion. And so there is just this expectation we should see it around that level continuing here. As we get potential embargoes coming through from Europe, we should see that discount blow out even further as more barrels become available and need to price to be able to find a home elsewhere. And so we should expect that discount just for the Urals amount coming out of the Baltics, the Black Sea there, to really keep that discount. And that's what's going to make it attractive to find a home elsewhere.